Bring in Jim Rogers. He is the chairman of Jim Rogers Holdings. He is on the phone this morning. Jim, make sense of what we're seeing today.
Oh, Dagan, well, we've had 10 years of success, and maybe we're going to have to pay some prices for a while. You know, good times don't go on forever.
Jim, I want to talk to you about that because of the nutty, crazy, excessive monetary policy that we had around the globe. Because it was unprecedented juice coming from these central banks here, there, and everywhere. How long can this go on in terms of markets righting themselves, correcting, washing away the excess that we've been enjoying since, well, starting in 2009?
Dagan, never in world history have you had all the major central banks, Japan, Britain, Europe, and America, all printing staggering amounts of money at the same time. This has never happened in recorded history. So we may have to pay the price like we've never paid in recorded history. You're right. This cannot go on forever. Either the central banks are going to come to their senses, which is unlikely, or the market is going to force them to come to their senses.
But the reaction by these central banks, and you've seen it everywhere but the United States, is to just do more. But if they continue to do more, are they powerless? Do they have no mojo or juice left that they can continue to try and print money, buying bonds, if you will? But has that just stopped working?
Dagan, there comes a time when the market is bigger than the central banks, and the market says, we don't care, we don't want your garbage anymore. It looks like we're going to have those times in 2016 and 2017. I don't want their garbage anymore. Do you?
Their garbage.
You mean in terms of U.S. Treasuries, that's at least, it seems like a haven, at least recently. Jim, I know how you feel about the U.S. government. You talked about you're looking for more junk to short, which you started shorting junk bonds last year. You're not doing that with other forms of higher quality credits at this point, but I know that you've got your eye on that.
Well, yes, I do. But at the moment, I'm short junk bonds, as you say, and I'm short those stocks that never go down. But I'm long the U.S. dollar. I have a huge position on the long side of the U.S. dollar because people are going to flee to what they think is a safe haven. Now, the U.S. dollar is not a safe haven, but people think it is. They're not going to buy the yen. They're not going to buy the euro. So here I am. Let's hope I get it right.
Well, hasn't this been, Jim, hasn't this been like basically the epicenter of the commodity risk? Is what you just said is absolutely right. As everybody else tries to devalue, the dollar gets stronger, and in dollars, commodities end up being a place that you just don't want to be.
Well, that's exactly right. And often in history, when dollars go up, which has been very strong for 3 years, commodities go down, as you well know. I hope my plan, not that I know what I'm doing, but my thought is that the dollar is going to turn into a very overvalued item. It may turn into a bubble, at which point I'll sell my dollars and probably buy gold, or because gold will be down at that point. Now, I have made many plans in my life, and the market just slapped me in the face many times and says, we're smarter than you are. But that's the way I'm looking at the world right now. Long dollars, and I'll buy gold or something, commodities, when I sell my dollars. But that could be a year from now.
Jim, I wanted to bring up gold. Gold's up about $7 an ounce. It did top that $1,100 mark. It's slightly below that level right now. But in terms of gold, because you invest in all commodities, you've been focused on agricultural commodities as long as I've known you. But with gold, why gold if it just doesn't have the uses and the application in our lives that other commodities do, whether it's grains, whether it's other metals?
Well, you can buy silver. If I were buying one of the two at the moment, I would buy silver because historically it's down more than gold. But you're right. I mean, there are many people who tell you that gold, I'm not the first to tell you, it's a barbaric relic, et cetera, et cetera. Who cares whether it is or not? As long as people think that it's something that they should own, who cares what the intellectuals think?
Hey, Jim, assuming you had a momentary lapse of reason and agreed to run the FOMC, what steps, if any, would you take to help right things or get things back to actually being market-driven? What would you do?
I would abolish the Federal Reserve, and then I would resign.
Well,
for putting you in these situations. I would also like to know what you think the Chinese government should do at this point to stem the free fall, or should they let it go and let all of this trouble actually bleed out for once?
Well, absolutely. I'm long China. I'm actually standing in China right now. If I were the Chinese government, I would stand aside. I would let the thing collapse. Every time any government in the world throughout history has gotten into a market, it's an unstable situation, and that's happening again. If I were the Chinese, I would stand aside. And by the way, I own Chinese shares, so I would lose a lot of money. But it would be a temporary thing, and the best bottoms are the ones where you have a big collapse, it finds a natural, solid bottom, and then you can start over. That's what I would do if I were China.
Wait,
I'm not China. They don't have to listen to me.
Hey, Jim, you're long China, though. So the market, certainly the sell-off this week, you don't think, and it seems to indicate at least some economic weakness. They're devaluing the currency, trying to juice exports, but you're fine with that.
You asked me what I would do if I were the Chinese government. Yes, that's what I would do. As I said, artificial situations are always unstable. And Devin, I'm a little shocked that you say they devalued, but the currency's down 2 or 3%. That's not a devaluation. That's a market fluctuation.
That's right. Hey, Jim, one thing you mentioned, I want to backtrack to. So I know you're short junk, and then you said that you're short overvalued stocks. What? Are we talking about the Facebook, the Amazon, the Netflix, and Google?
Yes. Yes. There are 4 or 5, maybe 9 stocks in America that never go down, or haven't. They're starting to going down now, fortunately, and saving my Chinese situation. No, those are the stocks that I'm short. I've been short them for 2 or 3 months now, and fortunately, they're coming to the rescue.
They are indeed, as do you always. We always call in whenever we need you. Jim, it's better if you're here in person, but anytime you want to call, please do.
Well, Dagan, you know I make plenty of mistakes. So I'm happy to talk about them anytime you want.
All right. Well, I have a question. What's the biggest mistake you made in the last 6 months, then?
Well, the biggest mistake in my life was my first wife. Oh, my God. What a mistake that was. You know, I ran into her recently quite by accident, and I can't believe how happy I am that she's no longer my wife.
Well,
what a mistake it was.
Jim, I was really talking about investing, but I'm glad you shared that with us.
Okay.